Hello everyone and welcome to Day Trader S&P 500. It is a rare Sunday morning recording. Been out I think a couple of weeks. We're not able to do any videos from where we were, so we're going to get you guys caught up. It's been a little while, so a lot of catching up to do. Let's start with, let's go with the NQs. We haven't looked at those in a while, and we do a weekly NQ report, which was done yesterday. As a matter of fact, you can see here is the NQs. We're going to talk about that auto trade real quick. We'll get to that after this, but there's the NQs. Unlike the Dow and the S&P, the NASDAQ and its futures have not surpassed the July high. You can see July 11th high back here. Okay, we just got that labeled as the B wave high. We have a 1 down, an A up, B down, C up for a wave 2. There's the wave 3 targets. Okay, where is this wrong? When it goes above the July high, the NASDAQ is diverging. It leads on the way up and leads on the way down. The fact that it has not surpassed the July highs is telling us that something's wrong. Little divergence going on here. Okay, you can see our Fibonacci turn dates there. We'll get into this a little bit later, but you can see the next turn date is the December 8th turn date, and these have all hit alternating highs and lows. And again, we'll get into that in a little bit more detail as we move along here. Okay, let's get into here's that NASDAQ chart there. Okay, and you can see in the blue we've got a 1, 2, 3. That should be blue 4 and blue 5. You can see the high so far is at 20,983 on the 11th. There's our other targets and different wave counts there. Okay, so it's sitting up there, and as long as that high holds, we've got a 1 down and a 2 up with those other targets there. I want to show you guys our auto trades, because what we did, we took our triggers and targets algorithm and incorporated it into auto trades with Striker Securities, which is a futures brokerage account. Okay, we're not one, but they are. So they are auto trading our triggers and targets system. Okay, so there's their landing page there and their information also. Okay, I want to show you guys too, get back into that NASDAQ. I think I have that information here. Yeah, auto trade. Okay, we incorporated our algorithm into the auto trades. Okay, the triggers and targets was potential gains, but with auto trades it's real gains, real losses, real trades, and real stops. Okay, developers, yours truly. The trading system is we use triggers and targets and Fibonacci extensions and ratios guided by our Elliott waves. We use a money management system, Ryan Jones fixed ratio money management system. It limits our trading losses to 5% and builds on our gains. Okay, how it works, you open a futures trading account with Striker Securities. They auto trade my trades. There's the contact information there. This is new, so you may ask, is there a track record? No, just started it actually. We got it from our triggers and targets, which we started almost a year ago in October, and the triggers and targets have kept us on the right side of this market for practically a year now. Okay, so there's that with the NASDAQ, and we did the NQ. I want to look at the ES hourly if we can. There's a lot going on here. We'll get you guys caught up on a lot of other markets, but from that July 16th high, which the NASDAQ has not surpassed this July high, but the ES and the S&P and the Dow have. Okay, we've got a 3-wave correction down here, and this was a key level here, 53.59. This 1 up in blue. Okay, because we had a 2 down and a 3 up, and we had a 4 down, and this 4 should have held above the wave 1 high, and it did. It actually came within 1 point of a perfect 50% retrace, and within 1 day of our Fibonacci turn date, which we can get into more detail. So being able to call that wave 4 low within a day and a point enabled us to see this move up. and benefit from it, again, with our triggers and targets and our auto trades. Okay, so from there you can see we've got a 1 up, a 2 down. There's our 3 targets. I don't know if I got all that in there. There we go. Okay, so we've got a 1 up, a 2 down, and we're in 3. 3 so far is at 53.80. This is the futures contract. Okay, and then you can see our targets there. So we'll see this again. When this 3 tops, the 4 down should hold above this wave 1 high. Okay, so that's it on there. I'm going to show you guys the postmark close we put out. We just got back a day or so ago. Okay, this was Friday. Okay, pretty much the same thing. There's our auto trades, all that information there. Again, okay, I just returned on Friday afternoon late. Got a report out as soon as we got back. There's that same chart. Again, that direct hit in time, direct hit with price. That was key to enable us to call this wave 5 up to new highs above the July high. Again, the NASDAQ didn't do it. The NASDAQ futures didn't do it, but the S&P did, and the Dow did too. Okay, there's our target price, 53.93. The actual 53.94. Turn date 9/9. Actual turn date. Futures was not even a day, it was hours, because it went on a Sunday night, I believe that was. Okay, so that enabled us there. That level is still holding, that key level of 53.59 1/4, and there's our targets there. Okay, and here's our Fibonacci time spiral, which is called alternating low, high, low, high, low, high, low. Next turn day is 12/8. We'll see how that works out. We can get into that when we get into the monthly with the S&P cash, which I think, we'll do right now. We'll get into that October monthly report that we put out. Bring that over. Here we go. All right. Again, there's the auto trade. There's all the details there. There's our disclaimer there. Okay, here's that hourly chart on the cash S&P now. Okay, it's a little bit different, 7/16 start date, but you can see from the start date it marked a high, which meant the next move is down. So it went from red to black, red to black, red to black, red to black, and here we are again. Okay, so it's calling alternating highs and lows, which is making the wave analysis a lot easier than you would think, and we're catching all these turns. It's amazing how this has done it from that July high. Okay, so again, the key was this 9/9 right here. This wave 4 held above this wave 1 high, which told us it was an almost perfect 50%. We should go up to new highs, which we did. Again, our triggers and targets have kept us on the right side of this market since the October low of last year, virtually a complete year, and we're on it. Okay, so that's what we're looking at. Here is that Fibonacci spiral chart, if you will, starting on 7/16 with the S&P cash. Okay, and again, alternating highs and low, low, high, low, high, low, high, low. Next one should be high if the sequence is to continue in its alternating sequence. Okay, so that's it on that. And there's our hourly chart on the E-mini futures. Again, price, time, direct hit, keeps us on the right side of the market, keeps calling alternating highs and lows. And then is this the yeah, monthly? Okay, so we'll get in all these other indexes now. Okay, so that was the S&P E-minis. There we go. NASDAQ bullish count. It's sitting in between. It's still at the July high. There's still a little bit higher targets here to go. We got a couple different wave counts in here, a black one and a blue one. But if this July high holds, then again, that's what we're looking at in the NASDAQ. We're looking at an A or a 1 down, B or a 2 up, C or 3 down targets there. And there's the 1.0 and there's a 1.618 multiple at 13,533. Where is this wrong? When it breaks above that July high, which is 18,671 in the NASDAQ composite. Okay, moving on. This just tells you, by the way, in the other indexes, this move down here had overlapping fourth wave, which made it like a leading diagonal. But the NASDAQ is pure. There's no overlap with four. You can see 1 down, 2 up, 3 down, 4 up, 5 down, which is A, which makes this a B wave much more possible, realistic, probable, if you will, okay? Because this A down is pure. There's no overlap, okay? There is in the other indexes. This goes back to the January 22 highs in the Dow and the S&P, and the November highs in the NASDAQ, okay? That blue count calls this complete with a 1, 2, 3, 4, 5 up with a target there, 18,803 for 5, okay? So that's the NASDAQ. You see our downside targets there. All right, a move above the high, previous high in July brings the higher targets into play. Okay, and there's that verbiage there. The Dow keeps keeps making new highs, but it looks like it's an ending diagonal triangle here. Okay, if you look at the wave count here, we've got a couple different wave counts. Again, the blue counts it as complete. See the overlap here from the January 22 high, 1, 2, 3, 4, 5, 4 overlaps, 1. Okay, so may not be a B wave, may be an impulse wave. That's what we have here in the count. You can see our targets there for 3 and C have been surpassed, but this appears to be putting in an ending diagonal triangle, 1, 2, 3, 4, 5, and it just touched above that upper trend line, which is drawn in parallel with the lower trend line, which connected the lows, okay? You can see it's bounced up against it a few times. It just poked its head up against it last week. I don't know if it was Thursday or Friday. I was out, so it was around then, but we'll see if that trend line holds it. But that should be the end or near the end of that move up in the Dow. We'll see how that plays out. There's our targets and all that. You know, there's the verbiage on there. The bond market. We love the bond market. I wish they had rating services for the bond market. We'd love to be bond market timer of the year again for several years, but it's been gone for quite a few years. But anyway, we've had this one up from the 2020 low, the year 2020. Okay, we had a 2 down, Roman numeral, and we're starting with 3 up. There's 1 with a circle of 3, Roman numeral. And then here's 2. A down, B up, C down. Again, we had a trigger right here, okay, which told us that we're going to get a C, which should be equal to A, and C equals A at 3.501%, and our low so far is 3.605%. I'm not sure. I might look at the bonds. I think that might be off just a little, but it's real close. But it's coming close to the end of wave 2 with a circle, okay? We've got 1 up with a circle, A down, B up, C down for 2 with a circle. You can imagine what's next. What's next is wave 3, which should go at least above wave 1, which is over 5%. We're sitting right near 3.5% now. That's going to be a jolt to the system, okay? Again, we always ask ourselves when we're making a trade or when we're making a chart, where is it wrong? This 2 here should not go below this wave 2 low of 3.253%, okay? That's the make or break. If it goes below there, then it's going lower, obviously, and this count is wrong, okay? This will be vindicated with moves higher, above the B wave high, subsequent move above the 5.021% high, okay? So bond market is pretty interesting. So far, so good. We love the bond market, and it's acting true to form, okay? There's our positions. There's a verbiage there. Lots of triggers and targets, lots of direct hits, past and present. And let's get to the gold market. Not a lot has changed in the gold market. We've been bullish for quite some time, years actually, and we've been rewarded for our bullish stance. We've got a 1 up from the year 2015 low, a 2 down, and then we've got a 3 up and a 4 down here, and there's the 3 right there on 8/7/20, and a 4. Direct hits all over the place. 5 up is starting. There's wave 1 of 5. There's wave 2 of 5. Currently in wave 3 of 5 here. We listed all these targets because this looked parabolic, and it is so far. It's above the 1.618 Fibonacci multiple and below the 2.618. Okay, so since it has achieved the 1.618 target, our next one is the 2.618, which is 3,035.50 cents. That's what we're looking at there. There's that current trigger. Triggers and targets working for everything. There's our 3 of 5 targets. You can see we've listed the 2.618 and the 3.618. So that's what we're looking for in the bond market. There's all the past triggers and targets and all that stuff there. Okay, let's get to, let's see if we got that. Let's just leave it here. Okay, for now. We can get this, make this a bigger screen. Put that there. That's what we're looking at there as far as the targets go from that 716. Again, I want to show you guys one more time this this Fibonacci spiral chart. If I can get it here, I believe. Yeah, there's that Fibonacci spiral chart, and you can see the 55 days. The reason I started this way back in the 1990s was I'd go from the high and look for the 55-day low, which always occurred. Whether it was a crash or not, it would mark a low. You can see this one, to within less than a day, marked the low, which gave us that wave 4 low, again, which gives us a target up to the December 8th next turn date. If this pattern continues, it should mark a high. Of course, we'll watch this shorter term, 1 minute to 10 minute for our monthly subscribers for any kind of signal of a change in trend. But until we get one, the trend remains up, and the triggers and targets have kept us on the right side of the market. Okay, that's it for this time. The next update will be much sooner because we actually can make videos now. Thank you guys, and until next time, take care everyone.